All right, guys and gals, you know what time of day it is. It's about that time of day again here, folks. It's Tuesday evening. It's February 25th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best entry setups using a very simple 3-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is to help us find the best levels of support and resistance for tomorrow, the best entry setups and targets for tomorrow, and how could I forget, very important, identifying the biggest traps to avoid in tomorrow. That's Wednesday's trading session. And I have a jam-packed video in store for you guys and gals tonight. We'll get the charts all prepped up in the background. As you can see, we got some oil, some S&P, some NASDAQ, and some gold. A lot of movement in the markets today, so we'll put the pieces together for a good session tomorrow. So we'll grab the charts in a moment. And of course, I want to make sure we look at the calendar for tomorrow as well. The last couple days of the month, and of course, some big news coming tomorrow. I want you to know what to expect for tomorrow, Wednesday's trading session. So charts are ready, calendar's ready, I'm ready, you're ready. It's great to be back here with you here this evening. But don't forget, if you're here for the first time today, make sure you subscribe to our YouTube channel. I don't want you to miss the next newsletter video. So make sure you subscribe, hitting that big red button below the video tonight. That way you never miss another great video. And speaking of down below the video tonight, if you have any questions for me, any questions at all, drop those questions in the comment section below. I'll be checking in after I publish the video tonight to make sure we get all the questions answered. And as always, if you tune in every evening on this video newsletter, hit that thumbs up button for me, will ya? Always appreciate you guys tuning in and supporting this channel every evening on this video newsletter. So don't say I didn't warn you. Subscribe to the channel. I don't want you to miss tomorrow night's newsletter. Make sure you drop those questions in the comment section below. Hit that thumbs up button for me if you enjoy the newsletter every evening with me. In the meantime, though, let's not waste any time. Let's get this video going here. Starting off tonight, let's check the calendar for tomorrow, courtesy of O'Connor Day here. Let's see what the schedule looks like here for tomorrow. Tomorrow, of course, is Wednesday. It's February the 26th here tomorrow. Of course, what do we have here on the schedule? The Wednesday. So we always know that Wednesdays are going to have that weekly inventory report. That is definitely on our radar for all you oil traders. Now, let me back up here for a second, though. I almost forgot, right? End of the month, right? Last couple days of the month here. What does the end of the month tell me? End of the month always tells me higher volatility, right? End of the day, end of the week, end of the month, end of the quarter. We always anticipate increased volatility, right? This coronavirus isn't hurting either, right? Lots of volatility today. We do expect to see increased volatility as we go into the end of the week, which of course is the end of the month. So be aware of that. We are anticipating more volatility. And remember, when we get increased volatility, what's the key to trading higher volatile markets? There's really 3 secrets to trading higher volatility markets. One is a slower time frame, 2 is wider stops and wider targets, and 3 is cutting your position size down. So as we go into the end of this month, as we start to see more volatility, remember, it's that slower time frame, it's that wider targets and stops, right? Because you'll have to deal with those bigger moves. And because there's more risk on these more volatile markets, what do we want to do? Cut that position size down. So if you're trading 2 contracts, go to 1 contract, 4 contracts, go to 2 contracts, cut those position sizes down. You'll see a lot of these markets right now, the average 2 range will be kicked up, volatility is kicked up. So as we go into the end of the month, increased volatility, slow down the time frames, wider stops and targets, and decrease that position size. You want to decrease the position size because those stop losses will be a lot larger. And tomorrow we'll do that together in the trade room, right? Tomorrow morning, 8 o'clock Eastern time, when we get together and trade this stuff together tomorrow, we'll slow down the time frame, right? Widen out our stops and targets, and of course, decrease the position size. That's the best way to absorb these extra volatile markets. Now, back to our news here for tomorrow. We get 2 big news events tomorrow. We get the 10 o'clock new home sales, and we got the petroleum status report at 10:30. You're going to want to be at your desk tomorrow, 9:45 to 10:30 tomorrow. That's going to likely be the sweet spot for us. 9:30 has been really whippy and grindy because of this virus, right, happening overnight. So I would say till 9:45 to 10:30 tomorrow is probably where we're going to get the good stuff tomorrow in our trade room. Now, don't forget, if you're an oil trader like we are in our trade room, we've really got to be careful tomorrow after 10:15. Remember, once we get closer to that 10:30 petroleum status report, really important that we sit on hands, wait for that news to come out, and usually about 10:45, you'll be able to get back in the action again on the crude oil. So now we know what the plan looks like for tomorrow, right? The key components for tomorrow. Make sure you're aware of that big number at 10 o'clock Eastern time. And if you're an oil trader, trade around that weekly inventory report at 10:30. It's the end of the month. What does the end of the month tell me again? Slow down the time frames, widen out the stops and targets, and what? Yeah, cut those position sizes down, right? And again, we're going to do that together tomorrow morning in the trade room. Speaking of the trade room, I'm going to put all the links to get registered for membership and to join the trade room tomorrow morning. I'll put all the links in the description of this YouTube video, so don't be afraid to dig in there. Get registered as a client and come join me tomorrow, and I'll show you how to do exactly what we're talking about here this evening. In the meantime, though, let's get some charts all prepped up here. Got a lot to cover here tonight. Got some oil, S&P, NASDAQ, and of course we got some gold there, that yellow metal, right? Starting off tonight here on the crude oil in the upper left-hand corner here. Let's get that oil going here tonight. Now, looking at oil, what do we know about oil right now? We know we're bearish. That's pretty easy to see. I don't think you needed my help to tell you that tonight, right? We know we're bearish. What else do we know? We know we are 1, 2, 3 legs down. Now remind me again here for a second, what is it? We talked about this, right? What are these big moves usually? What happens? Usually when you see 3, 4, 5 legs down, what usually happens? We usually end up going into a range, right? Now tomorrow's a news day too, so a range is certainly possible here tomorrow. By 10:30 and that news comes out tomorrow, we may have already gone up, come back down, gone up, gone back down, and we might be dealing with a range down here for tomorrow. At this point, it's just an educated guess, but we will be looking for that here tomorrow. So we know we're bearish. We know we're anticipating a range down here. Is there anything else that I should be aware of? Absolutely, right? We've got this 49.58. That's the low from February. Sorry, that should be February 4th, not 24th. That's yesterday. That's the 4th, right, of the month. So that should be February 4th down there. That is a major low. If you look at a big anchor chart, you'll see a big low there. So we know we have a bunch of support waiting down here. Probably not a good idea to be selling into this low. And then I got my eyes on this reversal line, right? That's a beauty right there. Prior swing low can hopefully be used as some key resistance. So we know we're bearish. We know we're 3 legs down, anticipating a range. We know we've got quite a bit of support down here we're kind of concerned about. And we know we have a little bit of resistance here overhead, right, that I can use as well. Now let's structure. How can I sell this market at a level of resistance? I've got that level right there at 45. I've got this guy here at 38. I'll tell you right now, this is the sweet spot right here, that 38 to 45 area. You get those 2 reversal lines sitting there. Now, at the same time, you'll have to kind of follow the bouncing ball here. If I take this off the screen for a second, you can see where I'm drawing in that hidden channel. And boy, oh boy, does that high fit well. This channel, by the way, is drawn first off the lows and then up off those highs. And of course, you can see how well that fits. That right there is a huge add-on, right, to that level of resistance there overhead. And then, of course, if I can bring the other guy back in, right, here's another channel coming down here. Now, this channel, this may end up holding, in all honesty. It definitely may end up holding here. Hold on one second here. Let me get this out of here real quick. Get that cleaned out, right? So this channel here, this guy coming down here, this may end up holding. And if it holds here, this will probably be where the beginning of that range comes in. I wanted to leave that channel on there for you just so you kind of see where that might happen, right? So this might get kind of sunk back down in, and we may start seeing it go sideways there. But really what I want to try to get this thing up inside this area, right? I want to get up inside this area and sell high, sell at resistance. We saw a great example of that in the early part of today's trading session if you tuned in for last night's newsletter. And really the plan tonight is almost identical to the plan we had yesterday. I don't want to sell into this low. What I'd like to do is, we have that triple measured move down. I'd like to get these bears to take some profit here, get this thing to come up off these lows. Hopefully I can get those buyers to try to buy into that pullback, and I can sell into their stop losses for a great combination, a buyer failure, right, into a bullish or into a bearish pullback, tongue twister there, right? So again, hopefully here, got that round number there, battle zone there, battle zone there. If I can get up off of this low, get these buyers to think this market has reversed, if I can get them to buy off that pullback, now I know exactly where their stops are, right? Now I know where their pain points are, and now I can sell right into those buyers' stops. Don't forget though, those failure setups, they almost always pull back to that moving average, and that pullback is another great option for me to add to the position, or if I don't feel confident with the failure setup, I can grab it on the pullback instead. Now, we may also want to keep an eye out for a two-legged pullback, right? We might get that, like I said earlier, that little channel coming down here. We may see a shallow move like that. If we do see that type of pullback, we want to draw that trend line, get underneath it now, and use that trend line now as a key level of resistance. I call that a two-legged pullback pattern, and that comes from the one leg, two leg. The key here is we don't want to sell into that rising level of support. We want to get underneath it and use it as a level of resistance. So I really like this whole area up here. It's just a matter of time though before we know what type of pattern that we're going to get. So now we know if the market runs higher, I'm looking for the buyers to try and fail to sell back down. But could they hold it? How could I buy this market if it goes higher? I could buy it as it goes higher here only if those buyers now can hold that pullback. So far, every time they've tried to go above the moving average, they've really struggled and failed. So I really can't trust that buy on that pullback. But if I can get the pullback to hold, I call this a 1, 2, 3 reversal. In that situation, I'll mark up a new trend line off these highs. I'll bring it down to that low, find that major low, and we're going to buy off the low of that hidden channel. Now I know this is not predicting reversals. It's not the exciting white-knuckled, thrill ride, but it's reliable, right? We're not trying to predict reversals, right? This market's been pinned down towards that $50 a barrel area. Once I see a 1, 2, 3, once the buyers prove to us they've got momentum now I can buy that pullback. Now I will also tell you that sometimes those 1, 2, 3s, they really rip and they run higher. If it doesn't pull back on you, look for that two-try trap, and you'll know it. You'll start getting frustrated with it because it won't pull back on you, right? What happens most of the time is it'll go up, pull back, and get you in. If it doesn't pull back and it keeps on cooking higher here, not to worry. Just grab that two-try trap pattern. Remember, higher highs in price, right? And then trap low off the low. So that's some definite setups we're watching for as we go higher, right? What if we sit here and go sideways though? Right? I got the bull side and the bear side covered. What if we sit and go sideways? If we get a range-bound market, what's the best way to trade a range? Failure patterns, where it's a bear market above the range. Failure patterns. Wait for the pop-up. Wait for those buyers to try to commit and buy the pullback and sell right into those stop losses. So if we end up sitting here to set overnight, right into tomorrow morning, if we end up sitting here inside of a range down here again with 3 legs down Oftentimes 3 legs down gives us a range. If that's the case now, just keep your eyes on these levels overhead. Wait for that pop up. Wait for those buyers to think this thing has reversed. Wait for them to try to hold on to it. And again, if they hold on to it, there's that 1, 2, 3 reversal. There's that hidden channel, and we're buying off that low, right? So take the previous strategy and put it on that again. Makes sense, right? But if they can't hold that pullback though, right? If they can't hold it, we now know those stops are sitting right below those lows. And now my job at that point, my job is to sell right into those stop losses for that run back down again. Now, what if we keep going lower here? It could happen, right? We keep going lower here. What if we keep going lower here for tomorrow? You always want to know where the next objective is. So this 49.58, that's the low from, again, it's February 4th, not 24th, right? So we don't want to be selling into that low, but what if we go lower here? Where's the next objective? Right down in this area here, 49.01 to 48.50. Think of that like your runaway zone, right? Think about that like your runaway. So if we happen to pull back another leg lower here, we know where the next goal to reach is for those sellers. Now, as we go lower, you got to be thinking, as we go lower, it may run and go into another range down here. So be aware, it may, again, we're 3, 4 legs down. At any point here, this thing could start going sideways. If it does go sideways, wait for it to pop, wait for the buyer failure, and sell right into those stop losses, right? Don't try to pick the bottom. Okay, if we learned one thing from this week, picking the bottom is going to give you a handful of you know what, right? And it stinks. So we don't want to try picking the bottoms here. We want to make sure we try to fade those, right? Those bottom pickers. Let them let them wrap that rope around their neck and sell back down from there. If we run and keep going here, right? If we run and keep going, if we can get a 1, 2, 3 down, I would love to go grab a new hidden channel, pop that channel on, right, and get short off of that high. If the market kind of grinds lower, or if it shoots lower, don't be afraid to grab that 2-try trap, right? Looking for hidden channels to sell off of, looking for 2-try traps as we go, and I'm watching out for trading ranges as we go lower here. I like this plan. The hardest thing right now is going to be not jumping in as the market runs lower. If it wants to run lower, get that 2-try trap pattern to sell there. If it wants to run lower, right, wait for it to hold and go lower. Find that hidden channel and sell the high of that hidden channel. And again, keep your eyes open as it goes lower for that new trading range and sell those buyer failures above that trading range. Now, we've got a great plan for tomorrow. Tomorrow morning, 8 o'clock Eastern time, Monday through Friday, we're going to trade this plan together. We'll do it together. That's the easiest way to do it. If you're not with me tomorrow in the trade room, I want to make sure you get a deep dive into all these patterns. So what I'll do is I'll put a link up here in the upper right-hand corner for our free trading classes. Grab the free classes. That will teach you all about the 3-step strategy, my 4 favorite entry setups. I'll also send you hundreds of examples of how we apply our favorite strategy to our favorite futures markets. So grab that link in the upper right-hand corner. I'll also put a big button for you tonight below the video tonight on the trading blog. So if you're on the blog right now, it's right below the video, right? If you're on the YouTube channel, again, all the links in the description of the video, or grab that pop-up as it just came up there in the upper right-hand corner. We're looking good here. Oil looks great. Be aware of that pop higher. Get ready to sell that sucker back down again. Now, speaking of volatility, right? We talked about volatility earlier. And again, what were those 3 things again we talked about, right? The 3 keys to trading volatility. One is slow down the time frame, right? For example, I usually use, a 5 or a 6,000 tick chart. I'm on a 9,000 tick chart. What else? You want to widen out, right? Widen out your stops and targets, right? So I'll typically use like a 3-point stop on the S&P. I'll use a 5-point stop on the S&P in these types of market conditions, right? And it's not just end of the month for this, but end of the month is typical for this type of movement, right? So you'll notice widen out those stops. Remember, also widen out your targets. So 3-point stop, also now 3-point target. If you widen it out to a 5-point stop, it's a 5-point target. But if you're now taking a 5-point stop now, what's the next step? The next step is you want to cut your position size down. So if you're on 2 contracts, go to 1 contract. If you're on 4, go to 2. If you're on 1 contract, you've really got to be careful in days like these where you've got these very big whippy moves. If you're on 1 contract, your best bet is to use the slow time frame, widen out your stops and targets, use the 1 contract and limit into your previous, right, into whatever your risk profile is. So for example, if you're on 1 contract right now, you don't have any choice. You have to go with that slower time frame. It's the only way you can get good solid signals. You've already got, again, if you're on 1 contract, you've only got 1 to work with, so you can't cut that down. So how do you deal with the wider stop? You don't. Use your typical stop, which for me on the S&P will be 3 points on the S&P. On the NASDAQ will be 35 ticks in the NASDAQ, right? So use your typical stop, but then you got to limit in, and it's difficult. It's not impossible, but it is a little bit more difficult when markets get like this. That makes sense, right? 1 contract, you can't cut down your position size. You've got to use the same position size, therefore you've got to keep using that same, what I call risk profile, and you got to limit in, right? Limit in. And we'll talk about limiting in. What I mean by limiting in is you got to get used to using limit orders, right, to get those good entries. You'll get them. It's not impossible, but it takes more knowledge of how to properly time the entries. And again, we'll go over, that's unfortunately stuff we can't cover here on this video, right? But tomorrow morning, though, in the trade room, we'll do it together. Okay. Over on the S&P, S&P is a great example right now. You can't trade the typical time frames right now. They're so whippy, they're so volatile as we go into the month. What do we know about the S&P? First of all, we know we're bearish. That is for sure, right? That is for sure. No doubt about how bearish we are. Spent a good chunk of the morning chopping around inside that range, and then all hell breaks loose. 1, 2, 3, breakout, mark the low, mark the high. I wonder why they sold into that high right there. That's strange. It's almost like people knew that channel was going to be there. That's called a 1, 2, 3 breakout into a hidden channel pullback, and you can see everybody whooped on it right there as it went lower. I think the most important clue we see right now, though, is whether you want to call this 1, 2, 3, whether you want to call this 1, 2, 3, 4, 5, I don't care what you call it. That is one hell of a move in one trading session. Usually when a market goes this far, this quickly, and we talked about this last night, right? People are not going to want to keep selling down here, but nobody wants to buy this thing either, right? This thing is dead weight. It's pretty much a wet towel right now, right? Nobody wants to buy it, so it starts going sideways. So everything we talked about last night is really coming into play here tonight as well. Big moves, anticipating a range. Once I find my range now, so we know we're bearish. I want to be a seller in a bear market. Once I find my range now I start looking for levels of resistance to sell, right? Like my expanding triangle, support to buy, right? Expanding triangle. I'm finding levels of, I really like this area at 31.68. That's a great spot here where we have that expanding triangle along with that reversal line. There really isn't much of a channel here, right? You're probably wondering, Joe, where's the channel? There really isn't much we can do with that channel. They've already kind of got the juice squeezed out of that one here, if you ask my opinion. There might be something kind of hidden up here, right? There might be something hidden up there, but I'm not sure if I believe on that channel there. But that would also be, and you'll see an example of that here on the NASDAQ here, right? So if you kind of draw off of that low, it's a little bit tough to find it like that up around that high. Maybe. Doesn't look bad, right? So that would, of course, put us in a kind of a hidden level of risk. And you'll see the NASDAQ in a second. The NASDAQ fits like a glove up there. So that's a great area to keep in mind. So again, you got a reversal line overhead. You got hidden channel high overhead. You've got trend line high overhead. I'm going to go out on a limb here and say, I'm looking at that 3170, 3160 block up there, right, for some key resistance. So we know we're bearish. We got some good levels of resistance. We've also got some good levels of support here underneath us. We know those bears are going to want to sell high in a bear market. So really what it comes down to is it's all about the range. And the best way to trade a range. Let's talk about ranges here because this is going to be the big key here. What does a range tell me? Buy low, sell high, avoid the middle. What about setups? What's the best type of setup in a range environment, failure patterns. Every time the market runs up out of the range, we wait for the price to pull back to the moving average and we sell into those stop losses. I've got two sell zones, one up here, right, and the other is right above it, right? Those two up there? Okay, use those to tell you what type of entry pattern to use. For example, if we go up into this 3160, 3170 area, I'm looking for a pretty simple buyer failure into a seller pullback combination. This is a pretty common, right? A pretty common setup we see here. The key will be to get up above the range, wait for those buyers to try to buy the pullback, sell into their stops, and if you can grab it, sell that pullback before we go back down into the range. As you can imagine, that pattern's not going to work very well. The pullback won't work in here, right? You wouldn't want to take that pullback if it was right inside the range, right? The failure works, the pullback's a little bit aggressive because you're going to be digging right into that trading range. You can see an example back here, right? There's your failure and there's your pullback, right? That pullback, again, I wouldn't take that pullback. It's right inside the range there, not a very good, reliable one. But if I can get up here pretty good, right? Buyers try and fail, I can sell the pullback as well once we get back underneath that moving average. Now, what if we really pop? Right? What if we really pop here? You know, it's possible. It doesn't seem likely right now, but it's definitely possible. If we really pop now, right, up inside these sell zones up here, now what do I do now? That's a real strong move, right? So can I still sell this? I can, as long as I wait for the 1, the 2, and then I can sell it, right? I call this is the same basic idea. It's a failure pattern, but it's what I call a nested failure pattern, right? In other words, there's a failure pattern inside of a failure pattern. We see a strong move up. Anytime we see a strong move, we know we're going to likely get another leg in the same direction. So I got to give the buyers the benefit of the doubt, and hopefully it'll slip back below, right, that trend line. And we can use that trend line and resistance. We can use the stops as our fuel, and we can sell back down into that trading range. A strong move up. I don't want to call it a bull market yet, right? I want to call it a bear market still. It's going to take a lot for this thing to turn bullish here tomorrow, I would assume, unless, of course, we hear some remarkable headlines about this coronavirus. But we know that if it pops up, bears will try to sell it, but buyers will also try to buy it. We want to make sure we wait for those buyers, try once, try twice. We can sell into those stops. Now tell me, how could we buy this market? I could buy this market if it will jump up and hold a pullback to the moving average. If these buyers can show me they mean business and hold that pullback, I have no problem being a buyer. I'm not going to buy that pullback though, right? That is an easy way to lose money because, again, a lot of times it'll once, twice, and then collapse on you, right? And it won't go very far for you. So I'm going to wait for that, again, what I call a 1, 2, 3 reversal. In this case, a 1, 2, 3 breakout too. 1, 2, 3. Once I see that pop off the moving average, now it's on. Now we know they're probably making a run back to that big round number. I'm not going to chase after it though. I'm going to look for that hidden channel, right? Find that low. And I know this seems very conservative. It is very conservative. But remember, there's no first place ribbon. There's no trophy for the most number of trades every day, right? We want the best trades. That means I'm skipping the first pullback, taking the second one. The first pullback is predicting the reversal. The second one here, that's the one that everyone is going to lean into and hit pretty hard. Now, again, as I mentioned earlier, there's a chance here this thing may start to really rip as it runs higher here. If it really rips as it runs higher, I can look for that 2-try trap pattern. Now, this is a very specific scenario we're looking for on this because what will happen in this scenario is, right, it'll make a very strong run, right? You'll see it. When you feel it, it'll make a very, very strong run. And when it makes that run, you'll know it's a 2-try trap because there's a shallow pullback. It won't pull back to the moving average. In fact, you can almost see an example right here. Strong move down, shallow pullback, lower low. See how we don't get the pullback right there? What happens is everyone's waiting for that pullback. So when it comes back, look what happens, right? They whack it, and that's where you want to be hitting it, right? So that is a 2-try trap for the bears, right? So the bulls get that run up, 1, 2, 3, right? Big run up. We get a shallow pullback, a higher high. Now you know where that trap is, right? Now you know where that trap is, and usually it'll come just below, right? Just below that moving average. Usually it's right about the low, right, of those hidden channels. We will definitely be watching for that reversal into that hidden channel trap. That's a very reliable setup. And again, we're not trying to predict the reversal. Predicting reversals are for rookies. If you're tuning in every evening to watch this video, you are now, right, you are now among the well-educated traders out there who know better than chasing after these markets. So we know what we're looking for as the market goes higher. What if we go sideways here? If we go sideways here and we get stuck in the mud tomorrow, I'm looking to sell above the high. How do we do that? With a buyer failure into bear pullback setup, right? Same idea we've talked about so far. Let the buyers try and fail, sell it back down in. If we go sideways here for a while, can I buy as we go lower? I can. If we sit sideways here, I can look for a nested failure, a 1, a 2, and I can buy up from there. Make sure you get those higher highs in price, right? Make sure you get the higher highs in price. Let the bears try once, try twice, and hopefully you can see the difference, right? I can sell high by simply by selling into the stops of those buyers, but buying low in a very bear market right now, right? I've got to let those bears wrap that rope around their neck, right? I don't want to be a buyer too aggressive. I really like the fact that we have that expanding triangle down there. That might just be some easy money here in the early parts of tomorrow morning's trading session. Now, what if we make a run going lower here, right? Where's our next objective here? If I take a look lower right now, I got that 32.72, and then from there, I would imagine that big round number at 3,000, dare I say, starts to look pretty attractive. But for now, though, that 30.72 area is kind of the next leg lower here. What can we use to get short down to that 30.72 and a quarter? One would be a 1, 2, 3 breakout, right? Pull back to the moving average, draw that trend line down, find that hidden channel, and again, same basic idea here. We're waiting for the proof of the breakout and then trading the pullback thereafter. We're not trying to predict the breakout. I don't care how strong that breakout looks. You can't predict them, right? I'm waiting for the follow-up thereafter. Now, sometimes the market just tanks, right? Sometimes the market tanks. And if this thing just runs, right? You know what I mean, right? It does one of these guys, right? We're just going to runs on you. If it runs on you, look for that shallow pullback, that lower low, and that trap above the high. Runs on you, shallow pullback, lower low, trap high. And again, remember, most of the time, these are going to be just above the moving average. Most of the time, you'll be able to find that hidden channel. Usually, there's something else that you can use on that as well. There are some times where we'll take it almost naked, but it's pretty rare. Usually there's a channel on there we can find together on that. So there's some really good options there. I would also say, too, because the market has gone so far here, if we did see a strong move down, I would be sure to keep your eyes open for a range down here. You know, anytime I find myself big moves down, I know that at any moment the bears may go, okay, we're done, and they may go sideways here. If that's the case, what you want to do is, once you see those double bottoms, wait for the profit-taking rally, get those buyers to try to hold on here, right, and we'll sell into those stop losses, right? And again, if the buyers hold it, if they hold it and jump, what do? If they hold it, okay, now it's a reversal, right? We don't predict reversals. We wait for reversals, and we trade from there, right? See how it's all coming together here? Don't forget, tomorrow morning, 8 o'clock Eastern time, hit that link. If you're on YouTube, it's in the description. If you're on the website right now, it's right below the video, right below you. Get that, right? Get that membership for tomorrow and come out and join me. And again, if you're not with me tomorrow in the trade room, the next best thing is to grab that free course linked up in the upper right-hand corner. Let's keep this party rolling here right now. How about some NASDAQ? You can see now what I'm talking about, the NASDAQ. NASDAQ looks beautiful. So NASDAQ has a obviously bear market. And again, the NASDAQ is in the same situation the S&P's in right now. Extra volatile, right? Extra volatility, right? Extra volatile right now. With that increased volatility, what do? Slow down the time frame. That'll give you better signals. Widen out those stops and targets. And then cut those position sizes in half, right? That way you can still trade these more volatile markets without having to risk too much. You know, I don't want to have to shy away from these slow, right? These volatile sessions, but Again, if you try to trade a hyper volatile, high volatility market on your typical trade management, you have a very hard time getting in, very hard time getting out. It's going to be difficult to make money that way. Your stops just won't be able to hold in those situations. So slow it down, widen it out, right? Cut down those position sizes. Now, what do we know about the NASDAQ right now? We know we're bearish. That's for sure. No doubt about that. What else do we know? We are, and again, this is a bit discretionary here. 1, 2, 3, 4, right? Maybe 4 legs down. Maybe you call this 1, 2, 3. It really doesn't matter to me. I've got a bunch of support levels I'm watching right now. One of them is this monster measured move, which we're factoring off of that gap at the beginning of the week, right? 1 leg, 2 legs. So this is I would consider that to be a major level of support. So we know we're bearish, but we also know we got a lot of support down here as well. We do expect when a market goes this far in one session, we do expect to get a little bit of a range-bound environment, and you can definitely see there's that range starting to form. Anytime I have a trading range, I start looking for expanding triangles, marking up those higher highs, marking up those lower lows. Sell high, buy low, sell high, buy low. That's the general idea, of this expanding triangle. So we know we're bearish, right? I'm looking for levels of resistance. There's that beautiful channel that I was talking about on the S&P, right? There's that. This one looks gorgeous. Now that, right, that level of resistance is great. That lines right up with a beautiful reversal line here. These are the levels I look for here. A reversal line that never got touched. Right? Now you could have drawn a little bit lower there, but you'll notice there's a little wick bounce right there, a little wick bounce right there. That's what gives me that reversal line at 51. These are sneaky little levels here, right? They come back up, they missed it. I wouldn't be surprised at all if we end up, right, seeing bears waiting right around the top there. You got that hidden channel, you got that expanding triangle, you've got your reversal line up there. I've got my trading range, which I'm using to create my resistance overhead, my buy below. So levels are really looking good here. Now, what if we go up? What if we go down? What if we go sideways? I know it's very basic, but that's the way the markets move. And I always want to make sure I'm prepared for those 3 directions before I finish up my day each day. What if the market goes higher here? If we do get this price going higher here, I've got lots of resistance overhead. I'd love to see a classic buyer failure into a seller pullback for a run back down in, right? You can see examples of that where we pop up, the buyers try, they fail, we sell back down in. Great example here, buyer failure, seller pullback, right, as we go back down to retest that low. So I want to get up inside these sell zones, get up off this low, get those buyers to try and predict that reversal, right? Then we can sell into those stop losses. Also be aware too, if this thing really pops, right, back to that big round number, if it really pops and doesn't hold, but pops, right, now we look for that nested, right? So now it's a 1, it's a 2. Once we get those bulls now trying twice now we know where their stops are. Now we know where their pain points are. Now we know where those buyers go, get me the heck out of this, and they become sellers, right? That's why selling into stops of the counter trend traders is really some of the easiest strategy you'll ever learn. And it's very, very easy to trade as well because, well, I shouldn't say easy. The hard part is not getting suckered into that pullback. When this thing rips higher, you know what's going to happen, right? That little voice in your head is saying, just buy it. It's probably going to go all the way back up, right? They're going to fill that gap from the weekend, right? You got to tell that little voice to quiet down. Remember, that little voice needs to think twice. Yes, it might go up, but the odds are not there. The odds are not in your favor for that buy. What's a more reliable setup is to wait for that to fail and sell into it, right? So tell that little voice in your head to quiet down, right? We need that little voice in our head sometimes, but not when we're trading, right? Not when we're trading. So again, if we see a real strong pop up, I don't want to be a buyer yet until they hold, right? But I'll make sure they try once, try twice, and then I'll sell back down from there. Those are some really good opportunities there. Now also be aware too, a lot of times when a market really pops like this, and we get that nested, right? That 1, that 2. A lot of times, once these buyers fail, this thing just flies back down into that range. And a lot of times you can catch those little 2-try traps just before you go back into the range, right? Now this is obviously this is very much kind of, we don't want to trade inside the range, right? But again, if it just runs back into that range, I wouldn't trade inside the range, but look for that little trap high above it on the way back into the range. Because once those buyers fail up here, right, it's got one job, and that's to go right back to retest those lows. Now, as we go higher here, how do we buy it? I go up, strong move up, that sets a table. Second thing, pull back. Third, jump off the moving average. 1, 2, 3, reversal. 1, 2, 3, breakout. Mark up those highs. Right, now watch, I'm not going to draw my channel like that. I'm going to draw it off the big lows down here. Okay, this is what makes these hidden channels so special, because you'll notice they just love to pull back to those levels. Right, these will fool you every once in a while if you do those channels too tight. Right, so call a 1, 2, 3 breakout into a hidden channel pullback. Or like I said earlier, if this thing just starts ripping, right, if it just rips higher here, shallow pullback, higher high, trap low, right, and go from there. What we oftentimes get is a move up, a pullback to the moving average, and then we get this monster, right? That monster run as those bears get out of town and the bulls take over. If we get that, and the reality is a little bit of experience with this mark goes a long way. When I say a very strong move, that is all relative. A strong move on the S&P is not as strong as a strong move on the NASDAQ, right? If you want to get excited about the NASDAQ, it's a much more aggressive move, right? The market's a more aggressive market than the S&P. So it is all relative. A strong move, and again, we'll navigate this together tomorrow, but when I say real strong move, it's got that feeling like it's never coming back. That feeling, that little voice in your head says chase after it, wait for it. Wait for that shallow pullback, wait for that trap low. And again, almost always, these little traps will be off some sort, right, of hidden channel here, right, with that little 2-try trap pattern off of that low. So I think we've got a pretty good plan here right now on this NASDAQ as it goes higher. What if it runs lower? If we run lower here, like I mentioned, we got a bunch of support levels here. So I really got to make sure it's not going to be easy. 8,700 is that next big low. You'll notice there's not a lot over here. 8,700 is that next big low. We are in basically on the NASDAQ, we're inside of this big range right now, and the low of that range is at 8,700. So if we do get that 1, 2, 3 run lower, I've got to really thread the needle here to sell off the high of that hidden channel before we get down to the 8,700 big round number there. Or it's a strong move down, shallow pullback, lower low, higher high, trap and go. Right? That'd be another option here if we can get that real strong move lower. I think honestly the S&P has a little more space to move underneath its range. The NASDAQ is really pretty tight down here. We got 1, 2, 3 levels to work with. And again, if you look at a bigger time frame, this is a major range low from earlier on in the year. I would imagine that area could be a bounce, right? We may see it run, and we may see a 1, 2, 3 reversal. We'll be right back looking in the opposite direction again, buying off that low. Or it may collapse down and go sideways down here, right? Sit at that low here for a while. And if we sit there for an hour or so, now what do? It's a range. We sell above the high of a bear range. We wait for the pop. You got it, right? We wait for those buyers to fail, and we're selling back down again. So not a lot is different there if it makes a run. It's just we got to be careful with location. Location will be the most important thing to avoid tomorrow on the NASDAQ. Last but not least here, about the yellow metal. The gold futures here tonight. What do we know about gold? Gold's probably the most difficult out of all of these markets. We got obviously a range on here. The market pretty much spent most of its time today kind of floundering around into that range. And it wasn't until we saw that big push down, literally right into the closing bell here this afternoon on the gold. So we know we are overall bearish, right? We know we have a range. What does a range tell me to do? A range says to buy low and sell high. So if I'm underneath the range right now, can I buy this? I can, but I've got to be careful because of that big strong run down. anytime you see a real strong move like this, you've got to anticipate what? Another leg in the same direction, right? You can see I'm sitting right here, the one measured move support. I'm really not too keen at selling low, but I will be interested in potentially selling up around the underbelly of this trading range. So we know we're range bound. We know we're bearish with a very strong move down. That strong move down is probably the biggest clue that we have here, because I think we can possibly get, well, we can wait and see what we get here. There are really two scenarios I'm watching for. One on gold, well, actually three scenarios. One scenario is going to be, I've drawn on my channel, right? We know that there is good potential with this much strength going lower. We're going to go back and retest that low. Right? Very good, very high likelihood with that much strength, that breakout, we get one more leg lower. That's one scenario. The next thing is if we fail and go back up into that range, I'm going to watch for that as well. The third scenario would be we go right back up into that range. These are the three things I'm watching for here in the short term on the gold. So I'm looking for a level of resistance. How would I sell this market right now? I'm looking for a level of resistance I can use. I'm going to mark up that low, up around that high, and try to sell off the high of that channel. Now you'll notice where this area is. That purple line at 45.9, that's the gap from earlier on in the week, right? That typically is a magnet, and you'll notice, right, they go back to it, they go back to it, they go back to it. It's continued to be an area where people have gotten in and getting out of their positions. So I'd like to use that purple line as my as a resistance level for me for tomorrow. Then you can also see a great reversal line, right? This is obviously a bottom for whatever reason. That level right there can be used as resistance as well. So you combine that, along with that hidden channel, resistance on top here, you've got yourself a pretty good opportunity here if we can get a good pattern. Now, what pattern would I look for? Well, you've got to anticipate that people are going to try to buy this thing going back into the range. So what I'm going to do is I'm going to wait for it to go up into resistance, wait for those buyers now to try to buy that pullback, and if they fail, I'll just simply sell into their stops, look for that pullback, and the key is going to be getting into this early. Okay, this is going to be one of the hardest parts. You're not going to want to sell this as it goes lower. You're going to have to get in, right? Simply selling into stops, selling into the pullback. Target is back down to retest that low, and then of course runner is down inside that 16.15 and change area, right? 16.15 and change. So option to sell this thing right now, we go up, the buyers try, they fail, right? We sell into stops, and of course we sell into that pullback. That's the idea, to sell as we go back down again. Now, how do we buy this market? As I have that strong move down, what do we need? We need one try for the bears. We need two try for the bears. And because it is very bearish, I'm going to take out the more conservative option on this and look for, it almost looks like a two-try trap pattern, right? I call these crown reversals. It's a little bit more conservative than a nested failure, right? A nested failure would just go 1 and 2. The problem is, though, if you get into this thing up inside that range up here, it's not a reliable place to be trading. That's the bottom line. I want to be a buyer at that point because we're not getting the setup, but I don't want to buy high. What I'd rather get is, as we go higher here, is bears try once, higher high, bears try twice, trap low, and go from there. That way, I'm absorbing the sellers, right? We are absorbing these sellers, but at the same time, we're not buying high, right? We're buying nice and low. That will be the way I'd buy it back up into that trading range. And then, of course, if we do just kind of get sucked back up into the range now we go back into that range here. So this is where I think a little bit more time will be necessary here. See what we get on this. Because if we do get that run higher here, right, do we sit inside the range like this, right? Do we sit here for a while? Because if that's the case, I can buy low with a seller failure pattern. I can sell high with a buyer failure pattern. So if we sit inside that range for a while tomorrow, that pretty much absorbs all the momentum. And I can buy low and sell high using my failure patterns. And again, I keep drawing these up, right? You can see all the examples of these. Grab that free course. It's inside the description of the YouTube video. There's also a big information icon in the upper right-hand corner. And again, if you're on the blog right now, I'll put all the buttons below. I'm just simply drawing on the charts right now, but you can see real examples of how we apply this setups to our favorite markets by joining that free trading course. So again, as we go higher here, if we run back in and go sideways, now I can sell high with a buyer failure. Now I can buy low with a seller failure, right? And we're picking the edges, right, of this range. The question I have though is do we really run? Right? Do we run? Because if we make a run higher here, this could easily be a full-blown reversal. Right? It may hold that thing and run. At this case, it's like what range, right? There's no range anymore. If they hold that pullback and jump, now it's on. We mark up that high, mark up that big low, and we're buying off the low of that hidden channel, right? Or let's say they do hold it and it rips, right, as it runs higher, like gold likes to do. Strong move up, shallow pullback, higher high, right? Trap low below that low. And again, right, these have a great tendency of lining up with, right, the lows of that, right, of that channel. So keep your eyes on that. Again, though, you don't want to make that, you don't want to gamble on that, but if they can hold that pullback and run, or if this thing just smokes right through the high of that range, right, if it just smokes through the high, right, I'll grab that high, I'll grab that low, look to buy that pullback, or makes that strong run, a real narrow channel, right? We'll grab that high, grab that low, right? And focus on buying, right, off of that low. So now we get a pretty good idea here how to buy it if this thing whips right back around here on the gold. I think we have it covered. We know how to sell it, right? We know where we're trying to go to be a short seller here. We know where they're trying to go, right? And again, it'd be a buyer failure into a seller pullback, right, for that continuation, or it's a crown reversal to be a buyer back in, right, or we go up into the range, we sit sideways, right, buy low, sell high, we're back into that range, or does this thing rip? Right? At that point now, we're finding those hidden channels, we're not chasing after it, and we're buying pullbacks on the way back up to retest highs. Boy, tomorrow's going to be, before you know it, hopefully I'll get a chance to trade this strategy with you tomorrow in our trade room every morning, 8 o'clock Eastern time. Don't forget, all the links I've talked about tonight are in the description of this YouTube video or right below this video on our trading blog. Don't be afraid to call me tonight in the office. I'll be here by the phone, right? It forwards to my cell phone. So I'll be there to answer the call. I'll be able to help walk you through getting registered for tomorrow morning's trading session. Don't be afraid to use that live support tool as well. And of course, as always, if membership is not quite right for you, make sure you grab the free course as part of our free trial. That way, at the very least, you can make the most of our time together every evening on this video newsletter. What a great day today. Again, don't forget, a lot of volatility right now. Slow it down, widen it out, and cut those position sizes down. Don't forget, tomorrow morning we'll do it together. As always, such a pleasure to be here with you. Come back and join me tomorrow night in the next edition of the newsletter, or I'll see you tomorrow morning at the opening bell. My name is Joseph. As always, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.